Hello, hackers. My name is Pumzile Madonsela. I'm from the AQC team, and today I will be taking you through the Hack the Horizon Finance Track Challenge, the challenge that's on portfolio optimization. And with this, it's just going and defining the problem, what is expected of you of hackers, and the expected solution. As you would have seen from the challenge brief, you are a financial analyst and you're managing a specific set of portfolio of assets. Those assets could be stocks, could be bonds, or commodities in the financial world. And each and every week you can trade, can buy, can sell, or can hold those assets. And what we want to find out is which one of those assets can generate the maximal return for your portfolio. Looking at this slide, you'll be seeing about 5 boxes, which we can say, for our purposes of illustration, it's the 50 boxes. So each box will correspond to the type of asset that you have. And from that asset, there's a reward we're expecting, which is the expected return it will have. Now, movement between of these boxes, that movement being trading some of those assets, actually corresponds to the transaction costs that will incur. And then some set, if you were to group, they will carry a specific risk together. So that introduces some of the constraints in these problems. So just by defining this, one should come to mind that this is clearly an optimization problem, where our target is to actually minimize. By minimizing the transaction costs and risk, we want to maximize the return we'll get. Which brings us to the actual job or challenge that you're presented with, where you need to pick the best combination of 35 boxes that give you the maximal return whilst minimizing the transaction cost and risks involved in that. So by the look of things, this we can translate it into an optimization equation, which you would have seen from the challenge brief, where your first term actually corresponds to your reward. The second term is this is denoted as your risk, and your lambda parameter actually, it tells us the tolerance of that. So the excuse me, the lower it is, the lower your lambda term is, it tells us the much risk seeking you are. The higher it is, it actually tells us that actually this is someone who's more risk averse. And then the last term corresponds to your transaction costs or the movement of those boxes. And here we do have that the tau, which is also that parameter that tells us how much you actually hate paying for these costs. So this is our QUBO equation. QUBO standing for quadratic unconstrained binary optimization. So those who might be familiar with optimization causes or theories behind, QUBO is one relevant, and this, what we have to do in our situation here is we can take this problem, map it into the classical version of it. But what we want to explore in this hackathon is how about we use quantum solution to actually arrive at this at the answer to this problem, And by arriving that using quantum means, we'll then compare the classical result versus our quantum result, and actually see if we do have a quantum advantage to this. Now, to map this into the quantum side, that's when we enter the territory of quantum physics, because for each, this could be considered your energy term or your Hamiltonian. So we need to take this equation and say what's the Hamiltonian version, which was shared on the challenge brief, where our binary decisioning becomes what we call quantum spins, and what we are essentially solving is we're trying to find the lowest energy states of our quantum system or our Hamiltonian, which is given by this term. Now, let's look at the constraints that are there. Of course, the portfolio size that we have. So we have 35 investment slots to actually fill in. There is some sector limits. So what you can't put all assets into one sector. By that I mean, you would want to limit, perhaps have 30% of the assets in tech that you were to hold by yourself, 25 in finance, and the remaining or the other splits in the different sectors. Also, as mentioned earlier, you can only move or change or have your movement only done once. So for example, in this case, you can only, per week, you can move about 10 assets, right? So too many changes can also result in the disruption of the market. I've also mentioned the risk tolerance that you have in terms of your lambda. So the higher the lambda, that's more about risk, risk averse you are. Now, the expected solution, what we want to send is which 35 assets will you action on? So which 35 assets will give us the highest returns? Which ones will you buy, or which ones you will sell? Also, so an indication you would have been shared with the actual data set. So which asset of those 50 would you buy and sell? And then the expected performance, this will record it in terms of Sharpe ratio, which is your ratio between your risk and return. Cost of the changes relates to transaction cost, and just the sector balance, as I was saying earlier, that you wouldn't want to throw all or a majority of your assets into one sector. So which 35 of those assets or boxes, and a box analogy that we had earlier, will be the ones that will give us the highest maximum return. Of course, in this, we want to see with that quantum advantage which quantum algorithm it's best to use. I will advise that you also look at the Qiskit library. It's quite comprehensive and intensive, and you'll actually find what type of algorithm works best for these types of problems. So explore that as you do your research. And I will also suggest that you perhaps start simplify the problem. Instead of jumping to 35 assets, start with 10. You can also just ignore some of the constraints that are there. Maybe constraint 3, where you don't have to move an X amount of assets per month. You can ignore that. Start with 10. Eliminate maybe bad assets. Just reduce the problem size. apply that to one of algorithms, quantum algorithm that's there that you'll find out, and then compare your classical method to your quantum one, which one makes sense. So I hope that clarifies what this challenge is about. And any questions, different approaches, please write them down on Discord so that we engage and see what ideas do come up in tackling this problem. And happy hacking from me. Thank you.